Hi, good morning, everyone. And my professor, my name is Parul, and my student ID is DESS3005. Today, I'm going to share my views on related to the topic issues of cash flow statement. Let us start with the introduction. Like, as you all know, like for the any of the company to know its how strength it is just derived by the cash flow and the income statement, like. And here we are going to discuss about the two statements has been provided, and where we are just getting a scrutinized analysis of cash flow and of BHP and Santos and Fantastic Limited for the years 2017, 18, and 19. Yep. And here we can see the comparative assessment of the company throughout the years from themselves and well as the another one. And finally, the financial strength of the companies and the credibility of the companies have been evaluated on the basis of the cash flows. Next we comes with the critical examination of the relative information content of income statement. Like, the information content of the income statement refers to the like income earned or the net profit or net loss of the particular company. In this method, if like depreciation is changed during the financial year, the calculation of depreciation may lead to wrong result. And same if it is like it can calculate the wrong income, wrong loss, right? And same can be adjusted to the income and expenses. And here we can see an issue regarding to cash flow is that it does not consider the excessive aging of accounts, receivables, the like material components of cash flows, like from operation, cash from investing activities, and cash from financial activities. Now, next, moving to like to the next slide, we can here see the major sources of cash and its uses for the three different companies. Yes, here you can see first I have taken the BHP Limited and the Centers Limited and then Fantastic Limited. We have further divided their activities into the further this one. First, we come like with the operating habit activities. Here you can see the BHP Limited deals with the profit before tax, and it takes the dividends received and the interest received. As similar, the Centers Limited has like the cash received from customers, interest and dividend received from other income. And on the another way, Fantastic Limited receive takes the cash receipts from customer in income tax refunded. And the second activity comes with the investing. So if we talk about the BHP Limited, it proceeds for the safe of assets from in, and it proceeds with the investment of subsidiaries. Yeah. And if we talk about the Santas, it also depends upon the sale of assets and proceed of investment of subsidiaries. But we can't say anything about the Fantastic Limited. We didn't find anything like about that. So next comes with the financing activities. If we come to like it comes from the proceed from interest bearing liabilities. And in Santos, we can see the drawdown of borrowings is the financing activities. And in Fantastic also, if the borrowings are being dropped down, so it is a good sign for them. Yeah. And next comes with the like again, the next slide shows you. Here I have taken the trend that shows the cash flow operation of the different like BHP company. Yeah. In the year 2017, 18, and 19, from the given slot, you can see The net operating cash flow from continuous operation from continuing operations in the number of years. Yeah. And coming to the next slide, here you can compare this trend with the Santos Limited, and further we can move to Fantastic Limited. You can see the slots of cash flow operations for the number of years of all the three companies. So next, moving to, like, if we move upon the comparison between the cash flow and the operation with the net income after tax in the income statement. Here we have, like, it's first have the influence of non-operating activities. Cash flow from operating contains only operating activities as shown on income generated only from operations. Here you can see, but BHP Limited also takes some non-operating activities, which includes the net profit after tax of the company. And the second one, we can take net operating cash flow cannot be derived without the net income after tax. And the third operation we can say here is like cash flow from operating contains change in the current assets. So moving to next slide, we here you have read about the BHP. Now, like, was the firm able to generate enough cash from operation to pay for all its capital expenditure? Here you can see BHP Limited has been consistent in generating enough cash. Like, as you can see, in 2017 it was 3.33, and 18 it was 3.08, and in 19 it is 2.22. So, like, it is having enough cash to make its capital expenditure. Now the next slide shows you the same for Santos Limited. So, like, here you can see it's not having a consistent ratio, it's fluctuating. Like, if it is in a 1 year it's quite high, in the another year it's fall down, and the another year it's uncertain increase. Now we comes to the Fantastic Limited. Here also you can see a negative cash outflow from its operations, as it is like in the one of the year it is minus 1.93, it's minus 2 3.90, and minus 52.83. Next we comes to cash flow from operations and dividend paid by the companies. Here you can see the all the three companies where its cash for operating cash flow and the dividends has been described. You can see the number of, like, years, and the all the three companies describe is cash from operating cash flow and dividend they are paying. Yeah. Next, move to the firm excess money from the operation and its uses. Here, if we talk about what the companies do with its excess money, like extra profit. If we talk about the BHP Limited, it uses its extra fund on purchase of non-current assets and its exploration of expenditure, and it basically, like, invest on equity accounted investments, and it believes in share buyback, like if the shares of own BHP are purchased by the among the members. Yeah. And if we talk about the Santos Limited, here also it main, like, lies on the acquiring non-current assets, quite similar to BHP. Like, it's also acquire exploration and evaluation of assets and expenditure of acquisition of subsidiaries. Next we comes, is the firm use working capital as an alternative of cash and cash equivalent or use of cash. If we talk about the current assets, those are the trade and other receivables, and inventories can be the current assets. And if we talk about the liabilities, it's are the trade and other payables, and we can say provisions and other assets are the liabilities here. Here are some the major items that may affect the cash flow of these firms are described. We can start one by one. Like if we talk about the BHP Limited, if the net income tax and the royalty related taxation payments are made and refunded, it may affect the cash flow of the company. If we talk about the if the net cash flow from discounted operations come or go, it also has an effect. And if we talk about the Santos, if the insurance, if any of the company has taken the insurance and it continues with the insurance, so it also have the effect of the cash flows. And if we talk about the restoration, as we have earlier told, like Santos depends upon the restoration of expenditure, so it also affects with the cash flow. And comes to the fantastic, like if we are just like paying repayment of commercial bills and international sales, like deals with, so it also has an effect with the cash flow of the company. Here we can see the trend of capital expenditure of all the three firms. Next comes with, here we have given the dividend trend for BHP and Santos. This the trend of working capital account for BHP Limited, you can see for the number of years, it's in the 2017. Here we have marked with the different labels. If you come with the trade and other receivables, you can see like the blue one, yeah, and the dark blue one is with the trade and other receivables. And if it just go to the turquoise, or you can say the green one, so it's trade and other payables. And investments and provisions on other assets and liabilities could be seen as for the BHP and the another two companies also. So next, coming to, if we talk about, so like now the question arises after like getting to the history and comparing the dividends, cash flow operations, investments, extra cash flow adjustments, we which company we thought like to be the best one. For me, I'll go for the BHP Limited, because it depends upon the lending purpose. Yeah, based on the annual report, I can say it is the most efficient to choose BHP, because it's a main gained company that analyzing the financial statement, and it has been found that this company is better than far than others. Yeah, in the last 3 years the net profit of the company is positive, that is shown above the discussions. It is also like pays off all the application obligations, and it's a continuous dividend provided to the shareholders. Like if any of the companies just not thinking about only for them, always thinks about its shareholders, and like all the stuffs are considered, and it's also making a profit side by side, so it could be considered as the best one. Yeah, so the company has no conflict with the government, and it pays its tax regularly and so stuff. So for me, BHP would be the good decision. Here we come to the conclusion, like if a company is considered sustainable when it possesses consistent profitability and the ability to generate a positive net cash flow, seems to be the good one. So here the report contains of the BHP, Santas and Fantastic. In terms of financial strength, we can meet their capital expenditure and credibility. Here the report provides a clear understanding of cash income statement and cash flow statements. So it can be a better helpful resources for the investor who wants to make the decision for investing in a particular company. So that's all for today. Have a nice day.